lately I've been talking to a few mortgage broker friends of mine, and what's interesting out there is that even though the market's slowed, a lot of people are still taking out really, really large mortgages. And I think you need to give it some thought before you just jump in and take on that mortgage. Because just because the bank will actually lend you that amount of money doesn't necessarily mean that you should borrow up to that maximum capacity. Because there are potentially some side effects from that. And what we're starting to see out in the marketplace is that people have taken on these really high mortgages, but they're struggling to actually make it all work on a monthly basis, and it's causing a lot of stress. You know, the two leading causes of relationship breakup are around communication and around money, and a lot of communication is around the stress of money. So you just need to sort of sit down and think, okay, well, maybe the bank has said to you that you can borrow $400,000. Well, that's fine, but what does that actually mean to you on a monthly basis? And if interest rates do go up another 1% or 2%, are you still going to be able to comfortably afford that $400,000 mortgage? Maybe that's going to be too tight for you. What happens, for instance, if you can't work for any reason? Maybe you've got the right sort of income protection insurance to cover you for that, but so many people I'm seeing don't. So you've just got to think through the what-ifs before you commit yourself to a large mortgage. Because you've got to remember that you have the potential to have that mortgage for the next 25 to 30 years, depending on the term and the repayments that you take out. So just because you can borrow that amount of money doesn't necessarily mean that you should. Just think it through and think through, is that actually achievable for you on a regular basis?